Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day of trading today. And in today's markets, guys, well, it wouldn't be the end of the month without another crazy day. The month of April has been absolutely wild so far. This is one of the biggest top to bottom drops in one single month, guys, that we've seen in a very long time. But to cap it all off, it's also been one of the largest bottom to top rallies that we have also seen in a very long time, close to 2 decades at this point in time. Now, in terms of today's wild swings, as you can see, the SPY today dropped off a cliff early in the morning by about 2.3%, and the QQQ's down a little bit more before recovering it all throughout the day and ending relatively flat. Now, a few reasons were behind that. Number one, we of course got a very bad GDP report, which we're going to cover a bit later in the video. That news was then abated by Trump's comments later on in the day, where he was speaking at a press conference and overall speaking with his cabinet members as well, in which we got some news that Trump received a positive phone call from new Prime Minister Mark Carney, which did help to lift the markets a little bit to the upside. Matter of fact, there were many such news events. This was no news at all, just a slight recapture in terms of price action. This right here is the action about the Carney news as well. Then we also got one little China rumor that the US was currently under negotiations with China, but that so far is just a rumor. So a very wild day to cap it all off, guys. So in today's video, we're going to be doing a few things together. Number one, we're going to be going over those GDP numbers. How bad were they, and what does it tell us about the status of the economy and the tariffs and everything combined? Number two, we're going to be going over some earnings that I have prepared for you guys, and those are going to be quite simply Microsoft, Meta, and Robinhood. Special shout out to Caterpillar and Qualcomm. They also had earnings that were noteworthy to report, but I figured I should say with the two biggest ones of the day. And number three, well, a retail fan favorite. So we'll be covering those three earnings after we get through the GDP news headlines. Thereafter, guys, we're going to go through our major technical analysis rundown of our major market indexes, followed by our big tech names as well. See how those big tech names are doing in the after hours, because now Meta and Microsoft earnings are pushing the markets a little bit higher. And since it's the monthly candle closes to wrap up the month of April, we'll also be doing a monthly candle technical analysis, something we do once every month at the end of the month. So it should be a very nice video and fun video as well. If ever you want to skip to a certain section, always be reminded that the links to the timestamps of the video are down below in the video description. Let's jump right into it, shall we? So the SPY up about 0.04% today. The Q's down 0.01, but did recapture a heavy loss intraday off of the GDP flush into a nice intraday bounce. In terms of our sectors, you can see that most of the market did recover. We did have some names lagging behind, such as Tesla, Amazon, Google, Meta, and NVIDIA. Meta is now up decently in the after hours, and the bottom half of the market performing okay. Financials were still dragging a little bit. Healthcare had a very nice day overall, and energy. Unfortunately, energy was one of the biggest loss leaders of the day. We will get to hear from their earnings in terms of the oil companies come Friday morning. Two of the biggest ones, Exxon and Chevron as well. So before we get in terms of the one-day relative performance, guys, healthcare actually on top of the board for once. They've been lagging behind the market for approximately the last 3 weeks. Nice to see them on top. And to the downside, energy, consumer cyclical, and utilities. Consumer cyclical not quite recovering after that GDP news. Very normal, because that was one thing that did impact those consumer stocks a lot. And when we take a look at the GDP numbers and news headlines, you'll understand why. In terms of the 1 week relative performance, guys, you can see that everything is now bouncing higher after we've concluded now a 7th on the SPY, a 7th consecutive day of green in a row. Very nice there. The only one getting left behind a little bit is energy. Where do we stand on the 1 month relative now that the month is done? Well, it's still a very mixed market. Energy, the loss leader, real estate, healthcare, and financials and consumer cyclicals to the downside, but some positive points in the market. Consumer defensive, even though they haven't really shown their face as much in the last 2-3 weeks as we've pivoted from value to growth again, and then technology actually in spot number 2. So before we get into more technical analysis, guys, let us dive directly into those GDP headlines and explain what exactly happened, and is it that bad for the economy? Well, the answer is it probably is, but a lot of the stuff that might happen to the economy is just not here yet. Let me explain. So GDP this morning came at a read of minus 0.3%. That is now your first negative quarter of GDP. I'll remind you the definition of a recession is 2 consecutive quarters of negative year-over-year GDP. And this was definitely one of them. Q1 coming in at 0.3 to the minus. The expectation was 0.4 to the plus side. Now, additionally, adding to that downside pressure was the private employment change down to 62,000 new jobs added. The consensus was 108K. So we missed by about 46,000 jobs. That is a pretty large number, and if that repeats itself on Friday for the non-farm payrolls, you could maybe see a red start to the morning there as well. Now, a little bright point here was personal income was up, but 0.5% versus the 0.4 expectation, and personal spending 0.7% versus 0.6. Is this people just front-running tariffs? Well, we can take a look at the GDP numbers to get a sense of exactly whether or not that's the case. So here you go. U.S. economy shrank 0.3% in the first quarter as the Trump policy uncertainty weighed on businesses. Now, we can read some of the headlines here. Imports soared 41.3%, driven by a 50.9% increase in goods. Imports subtract from GDP, so the contraction in growth may not be viewed as negatively given the potential for the trend to reverse. Now, quite simply, why is that happening, guys? Well, you guys know that everybody's trying to front run the tariffs. Tariffs-related stockpiling boosts U.S. goods trade deficit to a record high. Good trade deficits widens to a record of $162 billion, and imports soar to an all-time high of $342.746 billion. Why does this matter in the calculation of GDP? Well, I'll remind you, in terms of the calculation of GDP, should have had it up there, my bad, guys. But the calculation of GDP is very simple, right? It is a combination of consumption plus investment plus government spending plus net exports. Net exports is exports minus imports. So if you only export 100 billion worth of stuff, but you import a trillion, well, the net exports will be a negative number because you've imported more, and that will subtract from the overall GDP number. Keep in mind these 3 components as I go through the numbers in GDP, right? So, a slowdown in consumer spending and a sharp decline in federal outlays also contributed to the weak GDP number amid Elon Musk's effort at the Department of Government Efficiency. So, we know that net exports was down because imports are the highest they've ever been, people front-running the tariffs, but also government spending is down, and when that's down, that also detracts from your overall GDP read. That's another component we have to keep a close eye on. Consumer spending slowed during the period, but was still positive, but it did slow. Once again, consumption, another element that was slightly to the downside, at least more than so it was in Q4. Keep that in mind as well. Right? The slowest quarterly gain since Q2 of 2023, but still a gain, and down 4% gain from the prior quarter. Federal government expenditures declined 5.1% for the quarter, shaving about 1/3 of a percentage point off of the GDP. Now that all matters, guys, right? Every single element almost has been addressed. And we know as well that investment too has been somewhat soft because we've heard about that from all the banks' guidance just a few short weeks ago in terms of investment into the economy has roughly been at a standstill because of the uncertainty surrounding the tariffs. So consumption down, investment down, government spending down, and imports way higher. That all led to a GDP number that was very, very underwhelming. Now, is there a problem to it? Well, when you asked President Trump about it earlier on in the day, during his meeting with cabinet members, he said that, well, if you were to remove all the bad elements, GDP actually rose at 3%. What indeed was he talking about? Well, he's talking about this number right here. It's called real final sales to private domestic purchasers. Essentially, what you're doing is you're removing most of the investment portion other than certain private investment criteria. You're removing government spending and you're removing the net exports element of GDP. He is only talking about within the continental United States. Were people and businesses spending? And the answer was yes. And that's why you have that line right there in GDP. That was actually 3%. So if you read a headline saying Trump was claiming GDP was 3%, no, GDP was not 3%, but this component measuring retail, essentially, retail and private sales within the country, that was still net positive overall. So that is the, slight delineation factor that you must have there. Now, we know, guys, when it's a question of a tariff war, there are several people that are not winning, right? And one of those definitely has to be China as well. China's factory activity drops to a near 2-year low in April as the trade tariffs bite. Now, as we can see, it is the official purchasing managers index came in at 49.0 in April, which was pretty much for the U.S. economy, right? But China's was not doing any better. The trade flows between the two countries have been severely disrupted following the tit-for-tat tariff hikes. So China's factory activity dropping to a near 2-year low reinforces the emphasis on there is currently almost a literal embargo against Chinese products. Not many people are going to pay to import Chinese goods at a 145% tariff rate. China's manufacturing activity, here you go, here's the chart, a now 2-year low, their PMI officially reading at a 49. And you might say, well, we got them. They're being weak and we're still strong. Well, not quite. That's why we have the own ISM manufacturing PMI of ourselves coming out tomorrow morning. And as you can see, we're exactly the same. We're at 49 and tomorrow's supposed to come in at a 48. So, which reiterates the point, there are no real winners in a tariff war, guys. Everybody loses. It's just who loses more. You can see the manufacturing index for the United States has equally been dropping steadily over the past few months. So not only is China at 2-year lows, but you can argue that us as well are coming down into respectively 1- and 2-year lows as well as this tariff war rages on. Beijing's stance that no one stands to win in a tariff war indeed is correct when you just look at those two different manufacturing indices, both from China and the USA respectively. Moving on further, I think I have one more quote for you guys. Offsetting impact of tariffs will probably require doubling stimulus this year. That's what China is going to resort to. Is the Federal Reserve going to help the economy out and stimulate through its quantitative easing process or cutting interest rates faster than expected? Well, we don't know, but Beijing is definitely starting to do that. They'll need to deploy an additional 2 trillion in yuan in fiscal spending to counter their current 2% loss in GDP. We will see if the US will do the same. That all leads us to one final thing that I wanted to bring your attention to, which is this right here. The Port of Los Angeles says that shipping volume will plummet 35% next week as the China tariffs start to bite. Yes, less stuff is coming into the US overall, guys. That is a well-known fact because of the tariffs, as a matter of fact, right? Shipments from China make up about 45% of the business for the entire port. So you can expect maybe something like this. This is what Apollo Research Management came out with just the other day, and their timeline in terms of the voluntary trade reset recession, as they call it, goes something like this. Here you have April 2nd Liberation Day tariffs. Then you obviously know that it takes some time to ship stuff from China to the US. Most of all those shipments are now being wound down because the price that you have to order at now is significantly higher. 40 days of container ship transit time from China to the US means that the last batch of those non-tariff ships will come in early May. They come to the US ports. As we can see from that article from the Port of Los Angeles, we're coming to an end of those shipments, right? Then 1 to 10 days of truck and rail transit times towards cities means that mid-May or late May, trucking demand will then come to a halt, at least out of ports. And then empty shelves and companies respond to lower sales. How? Well, by doing layoffs in trucking and the retail industry in late May and early June. That is their timeline. And if we were to respect this article coming out directly from the Port of Los Angeles, they may indeed be correct. Now, of course, the assumption is that we have to replace those goods, right? Do we have the capacity to replace those goods? Do people even need to buy Chinese goods? I'll remind you, Chinese goods are not only somewhat cheap trinkets that you find on Temu or stuff like that, right? No, no, no. There's a lot of construction materials, a lot of critical minerals, a lot of everything else, guys, that people don't often think about that businesses truly and deeply need. So we will have to reposition the supply chains, and it may take a while. Now, how does the Federal Reserve or expectations about rate cuts feel across all this? Well, we currently still stand at about 4 rate cuts for the entire year. That is what the market is pricing in from now until the end of the year, which is more rapid than the 2 interest rate cuts the market was pricing in just a few short months ago before the tariff drama all started. So those are your major news headlines of the day. Hopefully you guys enjoyed that recap. In terms of where we're going, guys, nobody knows. There are too many moving parts. You can make the argument that, yes, we may be going into a recession if the tariffs are maintained and we cannot replace those Chinese goods as easily as one may have thought. But then again, as I showed you guys yesterday, right? President Trump has been very outspoken on the fact that maybe this is the transition period that he's been referencing ever since he was on the campaign trail just 1 year ago, promising the tariffs and also saying that there may be a transition, aka a detox period, as they repurpose supply chains and try their best to reshore manufacturing domestically back to the United States. So before we get into more of the technical aspect of the charts, now let's dive into the earnings section of the video, shall we? So in terms of earnings, we're going to start off with a very big one, of course, which is going to be Microsoft. We got 2 big ones, Microsoft and Meta, but I will start with Microsoft. Microsoft now in the after hours up almost 8%, one of their best showings, guys, in almost a year's worth of time. So what exactly happened for Microsoft to be up 8%? Well, a double beat and a raise on future guidance. Moving on in terms of the numbers, 7.38% beat on EPS and a nice little bump on revenue as well. Their Azure services were a bright spot, and we'll get into that in just a few short moments when we derive what exactly happened, and is Microsoft a good buy, even right now sitting in the after hours at about $425, $426. Here is your earnings snapshot. You can see that that revenue number is a 13% year-over-year gain. Azure growth came in at 33%, fantastic in comparison with most recent quarters. It's at the top end. Operating income, very nice as well, 16% bump, and a nice little 18% bump on EPS, also the largest of the most recent 5 quarters. Operating margin still stays very smooth in the mid 40% range, which is no stranger for Microsoft. Now, moving on into the article, Microsoft shares jump 9% on earnings and revenue beat with an uplifting forecast. Let's have a look, shall we? So Microsoft called for revenue in the range of 73.15 to 74 and a quarter. The middle of the range was 72.26. That is for next quarter. So beat on this quarter and a raise for next quarter combined. The company also sees 34 to 35% in Azure growth at constant currency, much better than the previous quarters, which were between 31 and 33%, another acceleration in Microsoft Azure growth, compared with the Street Accounts estimate of 31.5. Revenue increased 13% year over year. We already saw that. Net income climbed 18%. Those, for Microsoft, guys, those were very decent net margins. Microsoft is no stranger to very nice net margins. That is a net income margin of 36.8. That's roughly how much Microsoft has been doing in the last 4 or 5 quarters. So they are protecting those juicy net margins. On further, CEO Satya Nadella said earlier this year that Microsoft plans to spend $80 billion in fiscal 2025 on data centers, essentially. And the crux of the argument here was to determine, is Microsoft pulling back on that spending? They announced it earlier in January. Are they still going to do it? Well, the CEO staying firm and saying, yes, they are still fully committed to that $80 billion in capital. The company's Azure growth grew 33%, which we already mentioned. Microsoft said more than 15 million people are now using its GitHub Copilot assistant, 4 times more than last year. Often people forget that Microsoft owns GitHub, but nice to see a lot more people are using the service at this current time, especially for those programming purposes, right? Here are your Microsoft products and services growth over time, and you'll see that Q3, well, they call it Q3 because they run a different fiscal year than the calendar year, but all you need to understand is it's the most recent quarter. Here's your Azure growth at 33%, dynamic products and cloud services up 11. Now, weaker than the most recent quarters, this is true, but we did have other bright spots. 365 commercial and cloud coming in at 12%, still double-digit growth, but decelerating from the tough comps that we had last year. Microsoft 365 consumer products and cloud services, that was a 10, better than all quarters that we've seen in the last 6 quarters. Search and news advertising, a pretty decent one for Microsoft here, 21% matching last quarter. That was a bright spot. Windows OEM plus devices, that was also at a net gain of 3%, as Microsoft halts the assistance for Windows 10 and migrates everybody over to their new Windows 11. And Xbox content and services up a cool 8% overall. Fantastic numbers for Microsoft. Nothing bad to see about this company. We continue to see an increased commercial traction as we approach the end of support for Windows 10. Deployment of the next generation Windows 11 among commercial clients were up around 75%, he said. Very strong earnings from Microsoft overall, guys. Can't spend too much time on this, but just take a look at their different lines of business, their productivity and business processes. That's been steadily rising. That's the dark blue section on the bottom, looking very good. If I'll move my big head out of the way there. Sorry about that. Let me just move myself over. So productivity and business processes, that's been moving a little bit higher. As you can see, the intelligent cloud has also been having steady gains since the last 4 or 5 years, and more personal computing, although slightly flat as consumers kind of work through the pull forward in demand that we saw in after the pandemic, right? It's still moving forward, although not that fast of a process of gains. It is still in a roughly cyclical trough right now, but the guidance is that this sector should be uplifting by the second half of this year or maybe into 2026. Taking a look here, here's your Azure growth for Microsoft in terms of year over year and quarter over quarter as well. Well, actually, this is quarter over quarter, my bad. So you can see very steady gains, and the guidance for next quarter is 35%, which should put them at the top end of the range all the way up there, looking very good. And a few last things that I did want to show you guys in terms of today. You can take a look right here in terms of their commercial remaining performance obligations. How much money does Microsoft have in the pipeline? $315 billion, almost a year's worth, actually more than a year's worth of revenue still in the pipeline, which goes to show they do need those data centers, not only for large language model purposes, but for all the cloud computing and data hosting services that Microsoft does as a company. Other clients desperately need it. And when we also take a look down here, guys, at their cash flow, you can see down here, free cash flow was $20.3 billion, down 3% year over year, reflecting the higher capex to support the cloud and AI offerings, but $20.3 billion is still a very, very strong number overall. So all that combined leads Microsoft to be up 7, almost 8% in the after hours, a very decent quarter as they reiterate their status as one of the best companies on the planet. Cloud revenue growth stays very strong. Other products for Microsoft stay very strong, and they remain an absolute cash generation machine at 36.8% net income and juicy free cash flow of $20.3 billion in a single quarter. Microsoft, I'll remind you, gets an A+ balance sheet across every single metric. Their amounts of free cash flow and cash on the balance sheet is extremely good in relation to the debt that they have right now. And growth is never a problem for the company. They're they can weather a recession better than most. As you can see, even in 2022, when everybody else was dropping EPS and dropping revenue numbers, Microsoft actually went up. So very streamlined growth, very consistent, very profitable and predictable company overall. So in this case, is it a buy right now at $420? Now I know, guys, I know that we could have bought it back here. And trust me, on the channel, I was doing my best to convey that as well. I bought some Microsoft down there for my long-term portfolios overall, but in the event that maybe you were a bit too nervous to buy Microsoft or you wanted to get a sense of the tariff landscape, well, that is completely fine. Objectively speaking, though, right now at $425, is the company a good buy considering all of their earnings? Well, at $420, they're currently trading at a price to earnings ratio on a forward basis of 31.57. Down here, this was about a 28. That was the best valuation you could have found on Microsoft in years and years and years. And the PEG ratio at that time was under a 2. Now it's back above a 2 at 2.25. But Microsoft very rarely trades on a forward price to earnings under 30 and a PEG ratio under 2. It's just too consistent and too profitable of a company. Free cash flow yield currently sits at 2.4%. These numbers, guys, objectively speaking, are still on the lower end of what Microsoft regularly trades at. I'll remind you, they're currently still back in the range that they've been trading at for roughly how long? The past year of time. Have they improved their fundamentals since then? Yes, wildly. EPS year over year is going up quickly. The revenue year over year is also going up quickly. So to find a stock that's currently trading at the same price it was all throughout last year with improving fundamentals and improving guidance is still a buy from me. Microsoft is always a buy unless it gets pushed all the way up to the all-time highs. But even here at 425, guys, it is somewhat of a nibble for a long-term portfolio, but no swing trades for me. For that, I'd have to wait for a bit of a dip, a retest of the support range in around 405, 400, and then I might be tempted for a larger swing trade opportunity, but I love having this one in the long-term portfolio. That is everything for Microsoft. Now let's move into Meta, shall we? So Meta, company number 2, this one as well is up decently in the after hours, 5.5% after their earnings, looking pretty good. So what exactly happened? Well, Meta as well, guys, double beat, and this one was a very good quarter for Meta, guys. 22%, 23% beat on EPS. They bring in so much money every single quarter, it's not even funny, and a 2.36% beat on revenue overall. Let's take a look at the article and go through some of Meta's shareholder slides, shall we? In terms of the overall snapshot, revenue up 16% year over year. That stands right about there. Now, there's always a drop off between Q4 and Q1 every single year, but still, this is much better than the year over year comparison from Q1 of 2024. Daily active users hitting a record high 6% gain year over year, 3.43 billion daily active users. Operating income also up 27% when measuring across Q1 of 2024, and a nice bump on EPS as well, 37% beat, guys, in relation to Q1 of the same time just last year. Sorry, my big head is in the way again. Operating margin, same thing. You guys can see that from Q4 to Q1, we always have a drop, and that was consistent with Meta's drop again. But keep in mind as well, they are spending a bunch of money on data centers. Now, moving on into the article, Meta shares rise on stronger than expected revenue growth from the quarter. That is exactly what we saw. Moving on further into it, Meta's first quarter sales rose 16, while net income jumped 35% to 16.64 billion. What does that give them? That gives them net income margins of 39.3%. That is some of the best net income margins that Meta has ever had, arguably. Not as good as last quarter at 43%, but much better than most quarters over the course of last year's period when they were in the mid 30% range. Their cost savings still continue to push profits and keep profits higher. Second quarter sales will be in the range of 42.5 to 45.5. This was roughly in line with the estimate of the midpoint of which was 44 billion. Mark Zuckerberg had to say, our business is also performing very well, and I think we're well positioned to navigate the macroeconomic uncertainty. So a little bit of a comment there on tariffs overall. No guidance on the company, whether or not companies were pulling back on advertising. We didn't get so much clarity on that overall. He said the company was well positioned to navigate the uncertain times. Meta said that it lowered the range of 2025 total expenses, which will now come in the range of 113 to 118. The figure was previously 114 to 119, so dropping the range by about $1 billion. Apparently, they're not going to spend as much money as they anticipated, which of course was somewhat well received by the stock price. However, Meta increased its 2025 CapEx, right? CapEx is not the same thing as operating expenses overall, but I digress. Capital expenditures was actually raised from 64 to 72 billion, up from the previous range of 60 to 65. So they're saving on total expenses, being able to be more profitable than before in their operations, but they did commit to more capital expenditures in terms of build-outs of data centers. So those two figures kind of offset each other, which is why there was a weird share price reaction in the early stages after they released this report. This updated outlook reflects additional data center investments to support our AI efforts, as well as an increase in the expected cost of infrastructure hardware. Shout out to the rising cost of some of the materials from China. That is what you can digest from that earnings report. Several other companies have said the exact same thing. Microsoft also hinted at that as well. The company's advertising revenue for the first quarter came in at 41.39 billion, ahead of the projections for 40.44. Now that is almost all of the revenue stream entirely, because their other line of business, Meta Reality Labs, again posted an operating loss of $4.2 billion, while only bringing in $412 million of sales, which also was down 6% from a year ago. Now, this is something that Meta has been burning cash on for like 3 years at this point, their endeavors towards the metaverse. Keep in mind, they bring in over $40 billion in advertising, and 10% of that, they literally burn it for Reality Labs, right? So 1% of total revenue is costing them 10% of total revenue. That's not very good in terms of cost efficiency, right? But you got to give them flowers when flowers are due, right? At least they are trying something. They are trying something, whether it works or not. They have more than enough money to spend on it. A lot of people would like to see Meta kill this division because they would just be even more profitable. But I think it's interesting that they're actually trying to follow through with something, thinking outside of the box, because if they can do this right, it might actually generate some sales for them in the future, meaningful sales, that is. And if not, well, at least it was a good try. You can reference tons of these products that these companies have tried out over time. You might even remember the Amazon phone, right? The Amazon Fire phone. That was a flop, right? So sometimes companies do flops, but it's nice to see them put in their money to work. You know, they can give us buybacks if they want to, which they do, but it's nice to see companies trying to find new S-curves in terms of innovations, right? So you kind of got to give them that. Daily active users, we already covered that, up to 3.43 billion, very good. Meta's Thread microblogging service now has 350 million monthly users, up from 320 million in January. Meta last week said that all eligible advertisers globally will be able to run ads on Threads, another source of revenue for them as they try and compete with Elon Musk's Twitter. The Meta AI digital assistant now has nearly 1 billion monthly users overall. So those are all very nice statistics from Meta. Another strong quarter for them. Nothing bad to say. In terms of their earnings presentation, you can take a look at the revenue per geography. I mean, advertising revenue versus total revenue is almost the same thing. So you can use one or the other. All you need to understand is most segments of the market, when measuring Q1 over Q1 of last year, most of them were all up. Whether you look at rest of the world, Asia Pacific, Europe, US, and Canada, they were all largely higher than they were at the same period of time in Q1 of 2024. Why is Q4 the highest? Well, it's because it's the biggest advertising season for most companies in the world, because it's the holiday season, right? That's why you see a downswing in Q1. Now, moving over in terms of the segment results, we already went over Reality Labs versus advertising, where advertising is everything. Expenses as a percentage of revenue. You want to see this chart come down, and it is coming down in a meaningful way, at least when you measure comps year over year, Q1 versus Q1 of this year. Everything is largely coming down. There's a few upticks, such as marketing and sales here. Research and development as well has been marginally higher as they spend more money on anything related to AI and CapEx and stuff like that. But overall, guys, the total expenses as a profile is coming down, which is kind of what you want to see. Net income is higher than it was in Q1 of the same period of last year, which we already saw. And that is pretty much it. Their capital expenditures, well, there you go, right? This number is going to be like 65 billion in 2025 as they continue spending money on their data centers. And here's your family daily active people measuring over the last roughly 8 quarters, which is always nicely on the rise. And family average revenue per person, how much they make per person on the platform, a whole $12, which is pretty crazy, right? Also netly higher than it was in Q1 of 2024. So overall, guys, fairly good report by Meta. Nothing more to say than that. They're still very strong in terms of their balance sheet. So strong right there. I mean, they do have a lot of debt, but look how much free cash flow they bring in on a yearly basis. It's absolutely nuts. Cash and cash equivalents is very high right now, so they definitely do have money to spend on those data centers if they do want to. In terms of the forecast, Meta's forecast for the next 4 years looks beautiful. Expansion of EPS into the next 4 years and expansion of revenue similarly over the next 4 years as well. So very good overall, consistent company. They're one of the best advertising companies on the planet, and they keep showing it every single quarter overall. Are they a good buy, though? At $575, where they stand in the after hours right now, are they a good buy objectively for a long-term portfolio? The answer, in terms of historical standards, would have to be a yes, guys. They're trading at a forward price to earnings of only a 22.7. Normally, this company trades at a high 20s multiple or low 30s, which you can argue maybe is overvalued compared to the SPY. But right now, 22.7, objectively speaking, is one of the lowest valuations that you've found Meta in a very long time, trading at a 1.75 peg, which is okay. Normally, they trade above a 2 peg, and a 3.6% free cash flow yield, which is fairly decent considering it's a mega cap tech company, not you won't find it as better. You usually won't find these tech companies trading on a 5-6% free cash flow yield unless they maintain free cash flow and their share price drops by like 50+%. Yeah. So overall, Meta indeed for me is a buy right now. I also have added some long-term shares to my Meta portfolio during the tariff correction. But even objectively speaking here at 575, it's not a terrible buy if you have a long-term time horizon and you believe in the company and want to hold it for the next 5 to 10 years. Very solid company. Nothing bad to say. Phenomenal earnings report from them overall. That's it for company number 2. And then number 3, it's a smaller one, but a lot of people love this one. And we're going to talk about Robinhood. So talking about Robinhood, people's favorite brokerage, the stock is actually crushing it in terms of earnings, guys. They hit a phenomenal report, beating on EPS here by 13.74% and beating on revenue by 0.75%. They were hitting records all across the board. Record users, 500 million of buybacks announced as well, record deposits, and crazy net margins. So why is the stock only up 1.8% in the after hours? Well, possibly for 2 reasons. Number 1, the stock has already ran plenty. Number 2, it is somewhat overvalued right now. And number 3, they did miss on a few key metrics when measuring quarter over quarter. Not year over year, but some metrics were down a little bit in comparison with Q4, which was also prior a record quarter for them. Let's get into their numbers directly. And I really love Robinhood's presentations. They do a fantastic job of really putting the numbers into data sets for us throughout their highlights, essentially, right? So look at this. Funded customers, record 25.8 million customers overall. Gold subscribers, their premium paid subscription is up now 3.19 million people, 12% year over year in terms of comparisons. Total platform assets was also a record of $221 billion in assets on Robinhood's platform, and net deposits for the quarter also a record. Last quarter was a record for them, 37% year over year gain, but this one was also arguably even better. So looking very good on those fronts in terms of how is the business doing? Are they attracting more clients? the business is doing fine. And yes, indeed, they are attracting more clients. Now, here are some of the discrepancies in terms of why the stock might be down. You can see that total net revenues was very strong at 927 million, much better than they were at this same period last year, but down from Q4. Operating expenses, meanwhile, was up a little bit in relation to Q4. Now, in terms of adjusted EBITDA, you can see a similar drop, right? Very strong when you compare year over year, but a little bit of a bump down from last quarter. Net income, though, guys, phenomenal. And this time there was no cheating like they did last quarter. It wasn't really cheating. It was, different regulatory things and tax breaks and whatnot. But this quarter, pure profit here, $336 million, which gave them a net profit margin of 36.2. If you were to remove last quarter's quote unquote fake stuff, this is the best net margins Robinhood has ever posted in the company's history overall. Funded customers, we went over that already, but just so you guys see the progression of the chart, looking very good there. Total platform assets were up 70% year over year. We already saw this, but here they break it down, yeah? Equities down slightly versus Q4. Another slight pain point. Options and futures down, but we know why, right? It's just because the markets have dropped a little bit right now. So maybe people are trading a little bit less than Q4 when we were peak bull market cycle right after the inauguration from President Trump. And cryptocurrencies, as you saw, down somewhat incrementally as well overall, but net cash held by clients apparently still steady at $25 million overall. So not looking too bad there at all. Now here's your retirement account. So this is accounts under custody because they don't manage them. They're just under custody. Very good that they're attracting more retirement accounts. So Robinhood at one point was known as a pure trading platform, but was failing to attract long-term investors, right? Because they were known. I mean, most people started using this from Wall Street Bets in 2020 and 2021, right? And it's since grown into a more, mature service that is also attracting a lot of investments for retirement accounts, such as 401ks and IRAs overall. Nice to see them 2xing and 3xing their retirement account numbers, but also assets under custody as well. Looking very good in comparison with just last year. That's a fast growing segment of the business, 3.19% growth in Robinhood Gold customers. It's a very profitable segment of the business for them, of course, right? 3.19, and that is a 12% growth rate year over year. Net deposits as well. Record year for them, guys, and substantially above the 11.2 in the same quarter of last year. All in all, guys, I mean, trading volumes as well, right? Here's where some things fall down a little bit. Trading volumes down from Q4, but still way up when comparing year over year, right? These are just small little things that don't give it the 5-10% jump in the after hours that people would have hoped. They're posting record numbers. For some things, but other things, Q4 were record numbers. That's why options contracts traded. Well, you guys have been trading a ton of options on Robinhood. 500 million contracts this quarter. That was indeed a record. And crypto notional volumes was down. This is a little bit of a pain point for the company, because we know they make a decent amount of money from crypto. That was down Q4 to Q1. Why? Well, because altcoins have absolutely, crapped themselves. So you can argue that that's why the notional volumes of trading were down overall. But, nothing bad to say, guys. It's just in relation to Q4, some of these numbers were down overall. I'm not going to take you guys through everything. This is the last slide right here. Transaction-based revenues were up 77% year over year, but still down in relation to Q4 of just last year. But most of everything was up, but equities, you can see the green box here, was down slightly. Options volume was higher, but then again, we had crypto, which did take a big hit in terms of transaction-based revenues, because we know that the volume, as we just saw here, in terms of the volume decline here, notional volumes was down a little bit for crypto. So overall, guys, all I have to say is, we can do one more, okay? Net interest revenues were up 14%. More and more people are using margin. Be careful, guys. Be careful using margin in this market. I won't tell you twice, yeah? But overall, guys, not too bad. Yeah, they do break it down for us by segment. Margin interest was higher. This is what I tell you guys to be careful with, right? But interest on cash and cash deposits, that was up. Cash sweeps, securities lending, credit cards, very small for them. But here's interest on corporate cash and investments for the company itself, as it does invest its cash fairly wisely. So overall, guys, I think you get the point, right? Very good quarter for Robinhood, record users and gold subscribers, more buybacks from the CEO, Vlad, who had a very nice, he said good things about this quarter overall. They missed on some records from Q4, but overall, not that bad, right? Still a very, very, very strong showing from Robinhood. But overall, that's why you're not seeing the lift that you might have expected from this stock in the after hours with such record numbers. Because some numbers are record. Nice to see them having new members, which shows that the business is moving in the right direction. But some trading volumes were higher than last quarter, and some trading volumes were lower off their Q4. Very tough comparable quarter. That being said, Robinhood right now at $50. Is it a good buy? Well, it all depends on your time horizon. This business is definitely going to grow and grow to be into something probably a lot bigger than it is right now, currently at a $43 billion market cap. Now, we saw their balance sheet. Their balance sheet is pretty good. They're bringing in good net profits, now coming into their most profitable real quarter ever, but Robinhood's been doing fantastic from being a non-profitable business a few short years ago to now a highly profitable business, so good job for them there. In terms of the growth in the future, are they still going to be growing? Well, the answer quite simply is that's what the expectations say. EPS steady up and to the right after starting negative when they launched their business on the market a few short years ago. And revenue steady up and to the right. Big gains here into 2025, but then the gains get a bit smaller and smaller every year, but they will be growing as a platform overall. Now, the reason that this one is a bit of a toss-up is because of the valuation, yeah? At $50, they're trading at a forward price to earnings of 37. That gives them a peg of 2.55, which is okay for a fast-growing company, but can't lie, guys. These numbers do point to the fact that it is trading rich right now, and price to sales is $11.6 billion, or 11, not billion, it's just an 11.6, right? Price to sales, which is the higher end of a valuation that you would give a brokerage firm as a whole. All in all, though, very solid company. Do I mind it here? No. Can it rally higher in a risk-on environment where, you know, the retail trade gets a lot of action and people just push it up higher? No. Would the valuation support it? Not quite, because it's trading rich right now, but it can definitely go up. Where would this stock make a lot of sense is where it lifted off from, you know, just a few short weeks ago, yeah? If we can ever find Robinhood back again between the $40 and $30 range, I think the valuation is a lot more fair there to start it for a long-term portfolio. Is it a bad buy objectively here? No, but you have to understand that you are buying something very expensively right now, yeah? Even when you take a look at the 2028 forward revenues, it's only going to be about $5 billion. Who knows? Maybe they can outpace that. Maybe they can't. But if you think Robinhood is going to 2x from here, or more than 2x up to a $100 billion company, well, that, with $5 billion in revenue, would be trading at a 20 forward price to sales if Robinhood 2x's from here. Can it be possible? Yes, but that is like that's when it gets really stretched, guys. Really stretched. So you got to keep that in mind, what you're looking for, right? It's not just looking at the stock price and saying, oh, well, it used to be $68, so for sure it can go to 100. Well, maybe it can, but the valuation there would get pretty wild. I just want everybody to understand that you're not getting a fantastic deal here. It's a great company. It's a great company. But are we getting a good deal? The answer, objectively speaking, is no, but they are growing quite well. And as I said, the valuation does leave a bit of room to expand into a risk-on and bullish market overall. But if the economy goes into a recession, well, maybe that timeline for your appreciation gains gets pushed back a little bit, okay? So that's everything I had for you guys for Robinhood, so keep that in mind. Now, let's get into some juicy stuff, which is the charts. Okay, so looking into the SPY right now, well, we know that the Fear and Greed Index has been curling up now at a 35 read on the terms of the Fear Index, no longer in extreme fear conditions, as we have now recaptured roughly half of the drop, right? The drop size total on the SPY was 21%, and now we've recovered more than half of that, up 15, but you know, percentages don't work that way. We're only now down about 10 from the highs, so you have recovered a bit more than half. Now, in terms of the daily close, plus the after-hours bump from those big tech earnings, we are currently still sitting in a continuous daily uptrend overall, looking very nice for the bulls. They have a lot of space, but let's not get it twisted. Still in the confines of resistance into the 200 daily EMA, which is 562. Resistance stays planted 565 to 548 overall. Nice to see that the bulls, though, are well underway to a weekly expansionary phase. Your weekly MACD appears to wanting to be crossing over, well, not crossing over, but curling over to the upside right now, leaves us into a nice weekly uptrend. So in the event that the bullishness fades and we go into a little bit of a sell-off, daily downtrend, let's say, you got a lot of space on the weekly here. Anything above 509 looking for a weekly higher low for possible further trend continuation. In terms of the monthlies, which just closed today, very nice monthly recapture. This is a inverse hammer candle or a doji candle, whatever you want to call it. This leads us to believe that, well, maybe we could get some further appreciation a little bit higher in the early stages of the month of May, right? However, keep in mind, guys, with such a big engulfing move top to bottom, you do still have a possibility for either a wide, very volatile range, as we know that the possibilities of a recession are not taken off the table, and that we know there is still a lot of headline risk from tariffs, even though we have a very nice bounce. So the monthly candle, although it does point to some upside, I think it would be somewhat non-prudent of me, or imprudent of me rather, to say that, yeah, that's the all-time bottom. Now we're going into 2-3 years worth of bull rally without any, without any concerns whatsoever. It may not be just that simple. So although the monthly candle close does look very good, I would be remiss if I said that we couldn't end up in something like this, or maybe even go for a leg number 2 down, which is exactly what happened in the first spat of tariffs 2018. We got the sell-off, rallied for a few months, and then sold off Q3, Q4 when we actually got bad data. So keep all of that in mind when you're doing your analysis. Don't project out too far. There's too many moving parts right now in terms of the economy, the tariffs, and everything else. It's best to take things either one day at a time or just focus on this weekly chart time frame of control rather than projecting too much with the monthly time frames. On the QQQs right now, the QQQs as well, getting a nice little bump in the after hours right there. We know the daily uptrend is well underway right here as well. And we did lose the hourly time frame today. We didn't set an hourly downtrend though, so daily consolidation not quite yet underway, still a single continuation move overall. We'll see how high they can push in the event we get rejected by resistance, which we are at right now, the 200 daily EMA, and this resistance range 480 down to 464, which is these guys back there, and all of these guys back there as well. Well, you know what to expect, guys, right? If you end up in a daily downtrending process, let's say we get some bad news, non-farm payrolls or something else, well, you know who's in control here. The weekly bulls are back in control of this uptrend, and you just be looking for a higher low, anything above 428, looking for a weekly higher low for possible further trend continuation. If they take too much back, you may end up in some form of a awkward tightening range overall, but that is how you're currently lying on your SPY and your QQQs in terms of the monthly candle close, Well, same thing, right? Doji candle, inverse hammer candle, it does point possibly to some upside, but you can get those and still go down. These were two of them. They still went down afterwards, right? So the candle pattern formation looks good. We can gauge that there's a lot of bullish action happening down here. So in the event that we revisit down here, that is possibly an area to continuously add to our long-term portfolios. There are some big bulls sitting down there. And even for some swing trades, rather than chasing the markets to the upside, having FOMO right now and thinking that all the correction is over and, oh no, I missed the bottom, so I have to full port now. Don't think like that, guys. If you have a long-term portfolio, DCA with every single paycheck. Don't pay too much attention to the happenings on a weekly to weekly basis. DCA with your paychecks, when you get them, 10 to 15% of your earnings should be devoted to investing in your future self for the next 5, 10, 15, 20 years. If you're trading, guys, don't project too far out. Take it 1 week at a time and use your swing trade levels. Use the lows to your advantage. Any pullbacks will provide more than enough opportunities. When you break support, something like this, well, then you're looking for a breakout retest. The stops go down below there. And then you're targeting all the way up here. Trade with a stop loss and trade based on the recent price action levels. Do not start YOLOing and going all in when there's so many moving parts in this market. Moving into XLF right now, XLF up 0.18%. Very nice showing for them as well. Trying to set the daily higher lows and go for that daily uptrend continuation overall. The next stop for the bulls is going to be all the way up here, 50.29, the highs of who started all this downswing right there. And overall right now, the weekly timeframes are looking quite good. It is a new weekly uptrend for the bulls. If you close the candle like this, I can then close this box green under us. Support 48.28 down to 46.78. So looking pretty good on financials overall. Tomorrow, we get to hear from another big financial player, the likes of MasterCard reporting before the bell. If the Visa and American Express earnings are anything to go off of, I would say that they will perform quite well. So nice to see them there. Any swing trades currently that we're trying to make, right, in this area? Well, the stops, quite simply, guys, you can either have wide stops under the weekly lows and target the highs, or you can have relatively tight stops, either under the lows of last Thursday or the lows of today, which were the fear GDP lows. And you'd be targeting expansion into these guys up here with a stop loss down below there. Fairly decently attractive risk to reward profile. Moving on to healthcare right now. Healthcare up 0.85%. And finally, healthcare setting the daily uptrend by cracking the highs of a few Fridays ago, the 11th of April. Overall, guys, they have now finally also reset the weekly uptrend. They were one of the laziest components of the SPY, still struggling while everybody else had set weekly uptrends. Healthcare has now set their own weekly downtrend. Nice bounce, high, higher low, higher high. That is a nice weekly uptrend overall. Even if they do pull back from here into a bit of daily consolidation, it doesn't matter. You'd be looking for a higher low, anything above 131.50, looking for a weekly higher low to maybe just continue the slow and grueling process of capturing back all that they've lost on the monthly. Because contrary to other sectors, the SPY, never in a monthly downtrend. The Qs, never in a monthly downtrend, right? It was just a loss of an uptrend. A loss of an uptrend is not a downtrend. Downtrend, you need the lower high, lower low, yeah? Look at XLF, look at XLV. This is a monthly downtrend, yeah? So now they have to reverse it. Nice, though, that they've bounced amongst all of this support range from 22 to 2023. And my favorite name, I'll say it once, I'll say it 1,000 times, is UNH. UNH down here, guys, I think is a very good buy. We covered their earnings just a few short weeks ago, and overall, very cheap valuation for a legacy company. Moving on to SMH right now. So semiconductors also benefiting from the after hours move. They were up 0.47 on the day, up another 1.42 in the after hours session. If we open up higher, your daily higher lows are now set at the lows of today. After we did indeed lose the hourly uptrend into an hourly downtrend, that is your daily higher lows, which are being set after a few days of consolidation, looking for the daily uptrend move higher. However, where into resistance, 232 down to 213, it's a big level, guys. Let's not get it twisted, right? It's a very big level overall for semis, but if they can push and close higher than 212 for this week, that will be an official weekly uptrend for semiconductors with a higher low set at 187. In the event we unwind and move a bit lower, the thesis is the same. I'll be looking to add to my favorite semiconductors in the market right now, several of which we cover often on the channel, but other special shout outs go to companies like ASML, also in a big support range, and companies like Micron, shout out to them, also trading at a extremely cheap, multi-year low valuation, even here at 76 bucks. Special shout out to them, or the entire index on a pullback. Decent opportunity for some short puts in around the tariff fear lows. We'll take this chart one day at a time because we know there's a lot of moving parts in semiconductors around the tariffs, trade restrictions, CapEx, everything combined, yeah? Into the IWM Russell. So the Russell showing signs of life again. They were down 0.63% today, but still protecting their weekly uptrend overall. Now, keep in mind, right, in terms of where we stand on the daily time frame right now on the Russell, it is currently still a daily uptrend, trying to set some higher lows and trying to go for some higher highs. We'll see if they can do it into tomorrow. That would be a break of yesterday's high, 196.43. Also, keep in mind, we are moving into the top end of resistance right now. 200 down to 187 is this entire location. Weekly uptrend is still firm, so if we forfeit the daily uptrend, eventually it'll happen, just depends where it happens. When you forfeit that, you're looking for a weekly higher low for possible further trend continuation. And a lot of space between us and those lows at around 180.65. Overall, though, guys, the monthly time frame has now closed and also closing in a doji candle reversal pattern after they clipped into the bottom end of support in the mid 170 range. But we know as well that, unfortunately, they lost the monthly uptrend, right? That is a clear loss of a monthly uptrend. It was a long-standing monthly uptrend. They lost it. Now we got to put in a lot of work to get it back, right? So FOMO down here on the Russells? No, but if you wanted to take a longer term position on growth names now throughout maybe Q2, Q3, Q4, as we get some maybe hard recessionary data, I don't know if this chart is bottom. Nobody knows, right? But is here a bad objective buy if you have a 5-year time horizon? Probably not, right? It's still at relative lows. Now moving into the Dow Jones. Lastly, Dow Jones up about 0.35% today. Also trying its own version of trying to go for a new daily uptrend. Not quite getting it just yet. 40,800 remains a firm high for the market there. 41.3 down to 40,500 is the big resistance range. Still trying to go for the weekly uptrend shift on the Dow Jones. So even if they give back some of this daily move with a daily downtrend, don't panic. We still have the weekly higher lows below us. 37,850 is that range. And if you lose it too much, you can go into consolidation, right? Or they'll just be looking for a higher low and possibly higher high. We will take this one day and 1 week at a time, guys. No sense projecting when there's so many moving parts in the economy right now. So much headline risk, tariff risk, and every other risk that you can possibly imagine. But the monthly timeframes look as good, roughly, well, not as good as the SPY, but do still point to, a monthly timeframe that's trying its best to recover from some of the damage. Overall, guys, loss of the monthly uptrend, as we can clearly see, right? The rollover, so now it's going to take a whole lot of time to get it back. It's not saying they can't get it back. It's just when you lose a monthly uptrend, it takes months and months to actually confirm that you've gotten it back. And in my opinion, that'll not happen until you get more clarity on the macro. The VIX right now up 2.19%, up a lot higher early in the morning when that GDP news and then faded all throughout the day as the markets kind of recovered their rally, still staying planted between 30 and 22, which is the area in which, it's tough to get above there, but then kind of sometimes when you do get above there, you can stay sticky, especially when there's economic uncertainty. There's 2022, there's COVID, there's 2018, Trump tariff episode number 1. Here's the Trump presidency when he was first elected back in 2016 for his first term. Here's the 2011 flash crash, and here is the great financial crisis. You can see that amongst all those times, there was heavy amounts of economic uncertainty, which could not be solved with the snap of a finger. So volatility may be here to stay, maybe not at 45.50, but maybe at heightened levels between 20 and 30 would not be so crazy to think about that either, right? The dollar, not going to spend too much time on this as well, but we're still looking for potential breakdowns of the dollar over time. It is still weekly oversold, and above us is big resistance, 102 down to $100. Is it going to end up like something like this? I don't know. That's why I have question marks right here, right? It depends on foreign investment into the United States. It depends on whether or not you believe in the thesis of de-dollarization and the end of US exceptionalism, or whether you think this is a phenomenal buying opportunity for the dollar. Well, one thing's for sure, foreign investment will not come back heavily into the United States from foreign entities until you get a more clear picture of the macro. So that is the one thing that the dollar is dependent on right now. Bonds are a mixed bag today as well. The 10-year yield was down 0.10, but the 20-year yield was up 0.69. Explain that one to me, right? Well, it's very tough, right? All we know is that we are off the fear highs of yields, which are conversely the fear lows of the indexes. And I think that will be a continued point for the markets overall, right? More fear, higher yields. Less fear, there is less fear now than there were just 3 short weeks ago. Nothing has changed. We haven't gotten any substantial trade deals, but the language out of the Federal Reserve and the language out of the Trump administration has been a bit more friendly towards markets overall, which is why we're no longer at fear catalysts, but yields still remain objectively high in relation to where you would expect them to be, leading into a rate cutting cycle. And TLT as a byproduct still remains somewhat weak. I still like this trade. I still like the bond trade for some upside appreciation, but I've said many times on this channel that you may need to push back your timeline because there's a lot of moving parts in this trade as well, right? A lot of moving parts, guys. A lot of moving parts. That being said, bonds are still a decent buy here, but extend your time horizon possibly into the end of the year or 2026 to start actually seeing those gains that everybody's been hoping for on the TLTs to recapture that juicy $100 level, which would synonymously be a recapture of the 4% line down here on the 20-year bonds. That's everything for our major market analysis. Moving on to Bitcoin right now. Bitcoin barcoding, doing a whole lot of nothing. Nothing changes here on Bitcoin, guys, at all. We do have a monthly candle close, though. All that being said, we are currently still in a daily uptrend, still hunting for the daily higher lows with support below us, 92,000 down to 87,000. That was the big area of support there. Resistance here. Now we've gone up and cleared it overall. Why is Bitcoin performing so well? There's a little bit of risk on sentiment back into the markets with equities on the rise. And also, well, don't forget, Bitcoin is a byproduct of a currency. It is an expression of something versus the US dollar. So when the dollar is weak, Bitcoin as well has benefited from a bit of a rally similar to gold. And as we know, it's a weekly uptrend with support below us. Could be a nice trade opportunity here for a breakout, a retest, and possibly run. That could be an interesting trade with a MACD that seems to be curling to the upside here. And monthly looking good. Monthly candle close right now, pretty much looking for the monthly higher lows for possible further trend continuation. Well, number one, there's 2 things you can make this trade off of, right? I like Bitcoin. I have a lot of Bitcoin. Trust me, I haven't sold any Bitcoin at all. I added a little bit more to the long-term portfolios and a little bit of swing trades down here in terms of on-chain, yeah? However, Bitcoin is a trade of 2 tails. Number one, it's a risk-on asset. So that being said, if you believe on the risk-on recapture of this market and don't believe into a recession, maybe Bitcoin is an asset for you. But the other thesis has been the long-standing thesis of Bitcoin, right? It is a hedge against precisely what people are saying is happening to the US dollar, right? If you believe that the US dollar is slowly but surely eroding its status as the world's reserve currency, and that people will seek other things than gold as to be a, a steady and relatively easily accessible asset against the US dollar, well, Bitcoin is that thesis for many institutions and governments alike. I would not be surprised if more and more governments start to buy Bitcoin, as they have also been increasing their holdings of gold as of lately. Right? And so that is just the fact of the matter. That is the entire thesis, the long-term thesis behind Bitcoin as well. So keep that in mind. Now let's move on to big tech, shall we? So moving on to Apple, which has earnings tomorrow. They were up 0.61% on the day overall. Not a bad look from Apple, all things considered, but are moving into resistance 221 down to 210. Now keep in mind, Apple is probably going to move 4% up or down after earnings. That is the expected move. That being said, we are looking currently at possibly a daily uptrend, but with such a low amount of time remaining before earnings, it raises the question, right? Will they be able to clear this resistance range, or will they get shot right back down to resistance? That would be 4% moves in either direction. On a weekly time frame, guys, you can imagine that they are also following the markets, trying to set a weekly uptrend, but no weekly candle close just yet above the highs of 2 weeks ago. So we cannot confirm this weekly uptrend. All we know, though, with a lot of space between the lows, if we get shot back down, anything would be looking for a higher low above the 189 mark down there. One thing to keep in mind on Apple as well is this month looks as good as it does on the SPY in terms of those candles. They had since lost the monthly uptrend, so it's going to take a while to get them back. And a few key things to watch out for tomorrow is going to be all around the iPhone sales, which last quarter, they had their first decline. This quarter, Apple's done a few things to try and mitigate the impact of tariffs. Number one, they have moved their iPhone production to India to mitigate the tariffs as sales decline overall. So keep that in mind here, guys. Even though Apple benefited from a rush of orders for the recently launched lower-priced iPhone 16e ahead of tariffs, the Wall Street analysts still expect the company will report a small fall in iPhone sales, which would be the second straight quarters of decline for their best-selling product. Also, keep in mind, Apple makes 90% of its products in China. So all focus tomorrow will be on that shift of production, how long it's going to take, what are the costs associated with it, is it impacting their net margins, and have they lost any sales as a byproduct of that? So keep all of that in mind. We will cover Apple earnings on the channel tomorrow, of course. Moving on to AMD now. They were up 1.34% in the regular trading session, up 2.02 in the after hours right now. Why? Well, because you just had Meta and Microsoft say that data center spend was going to stay, and Meta even increased their CapEx guidance for that. So AMD benefiting from a bit of a rally higher. Moving on in, we are now looking at an official new daily uptrend with the higher lows being set as of today into resistance now 99.53 in the after hours. We'll see how they open tomorrow. Resistance 112 down to roughly $97 overall. Still no confirmed weekly uptrend. It's looking good to do it, but still no confirmed weekly uptrend. Any move down from here with the loss of the daily uptrend would just be looking for a weekly higher low, anything above 84, looking for that weekly higher low for further trend continuation. If you ask me where AMD is going to go, very tough to say, guys. They have earnings coming up next week overall. We'll get to hear from them as early as next Tuesday after the close. One thing's for sure, the company is still trading very, very cheap. We'll see how cheap after they release their EPS guidance numbers for next week, but it's still looking very good, guys. Very, very strong on AMD. I bring this chart up almost every video, it seems like, right? EPS guidance for the next 3 years, solid. Revenue guidance for the next 3 years, very solid. So if you have a 2, 3, 4, 5 year time horizon on AMD, that thesis has not even played out yet, so you may as well be a little bit patient. If I'm looking to swing trade this one, well, short puts below the lows here, but if I'm looking for a gamble, which I might just take in earnings because I feel this one has been beaten down a little bit unfairly over the course of the last 6 months. And on top of that, you have something that hasn't happened just yet that's happening right now. Can you see what it is on this chart? It's all the way down below here. It's the MACD, weekly MACD cross, and a very tiny positive bullish read on momentum. Could this be AMD's time to shine, or at least AMD's capacity to recapture some of the loss levels here? Maybe. We'll get to see from that next week, but looking good for a swing trade overall. Moving on to Amazon right now, down 1.58 in the regular hours. They were down 3 overall today before recovering half of that, up 3.41% in the after hours as the rest of big tech is just carrying them on their shoulders right now. Amazon has earnings tomorrow. The expected move is 7%. So whatever I say in today's video, the levels are definitely going to change. One thing's for sure, though, break the highs of Monday, and you have a daily uptrend continuation with a recapture of a resistance range, a big one, 191 down to 180. That would be a new weekly uptrend well in motion, and opens the door for a breakout, retest, and run trade. That will be quite interesting. If Amazon drops, however, 7% to the downside, I will gladly write some short puts down below at the fear lows overall. And the valuation of Amazon still is very, very decent, all things considered. They have their earnings tomorrow. We will cover them after the close on the channel. I am playing Amazon for earnings with short puts well under the market. I'm down here at 155. Would I maybe make a cheeky little call debit spread trade? Maybe. You'll have to see tomorrow after the close. I'll show you some positions in the after hours and show you what I did for Microsoft and Meta. Moving on to Google right now. Google down 0.72 in the regular trading and up 0.73 in the after hours. So I guess flat. We'll see how they open tomorrow. Google, one thing's for sure though, they are trying desperately to set a higher low, anything above 148.51, trying to go for the higher low for possibly a daily trend change. And on the weekly time frames as well, not looking too bad. They do have a daily uptrend going, weekly uptrend going right now, but into resistance, 175 down to roughly, let's call it 162, is a hot spot for Google, or at least has been in the most recent 9 months of trading overall. So we'll see if big tech can carry Google on its shoulders. One thing's for sure, they had some very good earnings, which we covered just last week, showed why, once again, they're one of the best companies in the entire planet because of their very solid net margins, their advertising, search, and cloud revenue growth, which is still good, their massive free cash flow, and the sheer amount of buybacks that the company does. At 170 right now, or even under, it's still a fantastic value for Google, even though it doesn't appear so. On paper, it's still extremely undervalued. Moving on to Meta right now, which just had their earnings. We covered their earnings earlier in the video, but in terms of price action, where do we stand? 570. I'm sorry, guys. I didn't do the monthly uptrends. What am I doing here, right? I didn't do them on AMD. AMD, same thing. Doji candle, not too sure, but it does point to a little bit of recapture. Amazon monthly candle, same thing, right? No loss of the monthly uptrend, big move down. So maybe tightening range or maybe expansion phase for a lower high. We'll see. And Google, same concept, right? Loss of the monthly uptrend. It's going to take a while to get that monthly uptrend back. But one thing's for sure, the monthly candle close was quite good. Sorry about that. Moving on to Meta right now. Meta, 578 in the after hours. Daily uptrend is now set, if they open like this tomorrow, into resistance, which stops at 600. 600 down to 560. They are now clearing the 200-day EMA at 569, looking pretty good. If they open the way that they are tomorrow and close the way that week, on Friday, that would be a new weekly uptrend for Meta, which would also let you know that, well, we've reacted nicely from support below 530 down to 452. This is now the new buy territory on any drawdowns. We're going to look for a higher low above 480 for a possible recapture and just continuation of the weekly uptrend now that we have it. And on the monthly timeframes here, guys, well, we're not looking too bad at all. Meta was one that never truly, lost the monthly uptrend by much. They did lose it, right? But the way we close right now is not terrible. One thing's for sure, though, they have to get it back, right? So it's going to be a long-standing process. Even if you V-shape, that's not a monthly uptrend, right? It's just a recapture of a move. A monthly uptrend is highs, higher lows, higher highs. It's going to take a while to find that pattern again, but looking pretty good. This is definitely the area of congestion for Meta, and I would not mind if ever, for some which reason, throughout this year, I find Meta down below there again. I will be buying more shares, the same as I did that entire period of the correction for a swing trade, right? You'd be looking for a weekly higher low or a breakout at a 600, breakout retest. Retest of 600 as support. That would fire off a swing trade condition for me, and I'd be going for a long. Moving on to Microsoft right now. Microsoft also, we'd covered their earnings, but we didn't cover the price action so much. 422 is where they stand right now, so obviously a brand new daily uptrend for Microsoft. Clearing above. I can't close this box green until the weekly candle closes. Keep that in mind. Weekly uptrend is now firm as well. So into resistance, 433 down to 425. It's been a hotly contested area from the bears for a very long time on Microsoft right now. So if we give back some of these earnings gains like Google and either just one-shot it or two-step daily downtrend it, well, you'll know that the weekly consolidation is now underway on Microsoft. Anything above 356, looking for a higher low. This is the breakout retest trade. Breakout, retest of 405 to 395. That is the swing trade location for some possible swing trade longs rather than just going long here into resistance, which is never fun. And on the monthly time frame here, well, it's not looking too bad, but this is a definition of a monthly downtrend, right? They lost it. Monthly downtrend. Now we have a nice move in the after hours. So May candle will open green tomorrow, but it takes a long time to get these uptrends back. But overall, very happy with that monthly candle close. It does point to a little bit more bullishness at least. And it does show us there's a ton of very big bulls sitting down there. So if ever I find Microsoft down there again over the course of this year, I will be buying once again. Moving on to Netflix right now, up 0.54%. Another green day for Netflix. Daily uptrend is clearly towards the bulls right now. Overbought conditions on the daily, so just be careful on this one. Eventually, when we do get a pullback, and we will, we'll be looking for a higher low. Anything at this point above 895, looking for a daily higher low for possible further trend continuation, but pullback a little bit too hard. Open up daily downtrend. Is that big of a deal? No. The weekly bulls are in control right now. Nice engulfing move. You'd be looking for a weekly higher low. And look at the monthly, guys. The monthly is, that's a screamer on Netflix, man. They closed at the high of the month. the absolute high of the month. So it doesn't mean that next month's candle is going to be just a blast off candle. It can be, but if we pull back a little bit, all you need to understand is you're looking for a monthly higher low, yeah? Anything pretty much above 823 is looking for that higher low for possibly further monthly continuation, looking very strong on Netflix. Onto NVIDIA right now, down 0.09 during the day, but up 3.82 in the after hours. Why? The CapEx spend from Microsoft and Meta, right? NVIDIA benefits from that. So trying to go for a daily uptrend shift. Lows of today are the higher lows right now for that stock overall. The high end of the resistance range is 115. The lower end is right now 105. Still not breaching through it, but nice daily uptrend. The weekly was still the context, this weekly downtrend. High, higher low, no weekly uptrend just yet. Need a break of 115 to get that weekly uptrend in motion. So nothing as of yet, but if NVIDIA drops a little bit, I'm always a fan of writing some short puts in the lower $90 range. In terms of a swing trade, well, swing trade, I mean, yes and no, right? If you want to just follow the rest of the market, I'd go fairly small. I would prefer finding it a bit lower around the $100 mark, but on the monthly time frame just closed nicely for NVIDIA, but just keep in mind they also lost the monthly time frame. They flushed the lows. So this was a monthly uptrend. This entire time was a nice monthly uptrend. They lost it. So to get it back, I mean, to get it back, you need a two-step process, but whether they can V-shape this or it's going to be a two-step process or we just roll over for a downtrend is anybody's guess, of course, but it does show us one thing. There's a ton of big bulls sitting down there. So if we ever find NVIDIA down here again, sub 100 down to roughly 85, could be a very nice add to some long-term portfolios as the stock still remains fairly cheaply valued. Now there's a few more to do and then we're done. Tesla also down today 3.38%, looking for a daily higher low, anything above 223, looking for that daily higher low for possible daily uptrend shift back to the bulls because we lost it. Now we got it back. And we are currently in resistance 302 down to 260 overall. The weekly is also trying to breach into an uptrend, but no new close of the highs, nothing above 292 just yet. So if you do get a loss of a daily uptrend for some rich reason, right, and move a bit lower, you need to understand that the bulls are looking for a higher low, anything above that same 223. Higher low, maybe for an uptrend continuation. I mean, if you look at the monthlies, it definitely shows that the bulls are playing good defense down here, especially in the lower 220 range. And maybe we can go a little bit higher, but keep in mind, that's a very big move to the downside, yeah? So if we cannot do this, which is kind of off the table right now, in my humble opinion, with everything that's going on with the tariffs, right? It may just be a either tightening range or a two-step recovery process for Tesla at some point this year. But assuming that the V-shape is coming, I think would be somewhat imprudent on my part, yeah? Moving on to Palantir right now. Palantir up 2% on the day and an extra 1.5 in the after hours. Quickly approaching the all-time highs of 125. Looking very strong on Palantir. Looks like Netflix overall. Yeah, daily uptrend is clear as day on Palantir right now. When we do get a pullback, and we will eventually get a pullback, you're looking for a higher low. Anything above 89, looking for a higher low. Possibly for daily uptrend continuation, but they have earnings next Monday. So keep that in mind on Palantir after the close. The weekly time frame is looking good. Nice engulfing move here on the weekly time frame. Still no uptrend. That would be higher low into higher high, but a very beautiful engulfing move moving towards the all-time highs. I don't have to say it by now. You guys probably know it by now. Palantir is very expensive, but the monthly candle just closed like this. Strong close on the monthly. It doesn't remove the fact that they are monthly overbought at a 92. And that right now, I mean, I haven't done this valuation here, in a while, but just to give you guys an idea, yeah, we did it at 78. I'll take some time, even though I know the video is long right now, okay? I'll take some time because none of these numbers have changed, right? So 2025 EPS, at least I don't believe they've changed, right? Like we did in last quarter. So they don't usually change quarter to quarter. 55 cents, yeah, 54 cents. So let's take that. So 120 divided by 55 cents in EPS, you're trading at a 218 forward price to earnings, something light, right? Only a 218 divided by your EPS growth rate, which is very fair at 28. It's one of the fastest growing companies in terms of net EPS. That's currently trading at a 7.8 peg. I mean, I'll buy some companies at a 2 peg, even a 3 peg, like CrowdStrike and stuff like that, right? They prove they have a very solid business model and the growth is not slowing down. But this is a little bit rich, right? In 2025 price to sales, I mean, you can take a look at their sales numbers right here. They're right here, right? Unless Palantir shows us a miraculous 2x in sales from the current estimate, which is somewhat unlikely. I mean, their market cap right now is 279 billion. So 279 divided by your 3.75, we'll do it right here in front of you guys, right? It's 74 times. So they're trading at 74 times forward price to sales. That is one of the highest valuations that I've ever seen in my entire stock analysis career. Now, Palantir is a fantastic company, don't get me wrong, but to think that you're buying it cheap here, I mean, let's be honest, we're not really buying it cheap at all, right? Can they 2x down the line sometime? Yeah. How fast is it going to come? I don't know. People have been waiting for this stock to pull back for a long time. I've been in this stock for a long time, guys. I mean, I have skin in the game. Like, I don't care. Like, I'm in, right? But I'd be lying to you if I said it was cheap right now. And I'd also be lying to you if saying that buying it here is a decent proposition. I mean, at this point, you're not buying the valuation, you're buying the story, right? Which is not a bad thing to do sometimes, but you know, any underwhelming growth, and that might not happen for a while, but you know, every stock has its day eventually where, you know, eventually it kind of stops, right? And goes into extended consolidation. When that period's going to be for Palantir, I don't know. There was a good part of it back here, but now it's on to another leg of rally. So congratulations to all the bulls out there, including myself. Moving on to SOFI. SOFI down 5.73 and up 1.52 in the after hours. I mean, poor SOFI, man. Like, they had such good earnings. We covered them on the channel. And just recently, the past 2 days, they're down 16% from their earnings high, giving everything back. Maybe too many people taking profit after being stuck up here. You know, they see their average cost back and they just take profit. All in all, though, normal price action, right? Highs, higher lows, looking for a new daily higher low. Anything above 1050, looking for a higher low. For possible further, you know, attempts into the $14 to $16 range of resistance. Overall, the weekly time frame also shows a very nice move by the weekly bulls right here. It is a now new weekly uptrend, right? Higher lows are set. Weekly uptrend overall. So any move lower, looking for a higher low. Possibly for a retest of the 14 to 16. I don't know, but the valuation is looking pretty good overall. We covered it just the other day after their earnings. And the monthly candle, I mean, they never lost the monthly chart, right? Big monthly move, looking for a monthly higher low. They cut deep, yeah, but could be due for either monthly full upside continuation or maybe even a tightening range into some form of a 2 or multi-step process of monthly appreciation. Monthly candle looks good. Moving on to Uber right now. Uber up 2% on the day, blasting through the area of resistance that we're struggling with the bulls recently, right? 79 down to roughly 77. That is the resistance range. Looking pretty good overall. Daily uptrend is still fully in control to the bulls. Your new higher lows arguably you know, are still all the way down here at 71. So looking too bad. Any pullback, looking for a higher low. Now you're looking at a nice trade, guys. The breakout, retest, and maybe run trade. It's on the table. Weekly chart looks good as well. Weekly downtrend into a nice engulfing move. If you do have a pullback from here, you know what you're looking for, yeah? You're looking for a weekly higher low for further trend continuation or maybe reset of the uptrend. And monthly, look at this monthly candle close. Very bullish. I'm very happy to be a long-term Uber bull here right now because you are looking bullish for continuation. We'll see if we actually get it. And lastly, TSM. Sorry, running through these quickly. I want to keep it under an hour and 20 minutes because I know your guys, you know, the long videos are nice, but I know everybody has their time, right? So moving on to TSM. TSM also nice. Daily uptrend has been set in motion. Your higher lows are now here. 160.62, right? Moving for some upside appreciation. Resistance ends at 171. And the weekly uptrend is also looking pretty good right now, right? Weekly downtrend. Highs, higher lows, higher highs, weekly uptrend. If they can clear the resistance and the EMAs, that'll be pretty good for TSM. Looking pretty bullish. We did their earnings a few short weeks ago. Even at 166, guys, I mean, it's 10% higher roughly, right? So add 10% to this. They're still under a 24 price to earnings and around a 1 peg, which is fantastic for such a solid company. Monthly time frame, same as NVIDIA, yeah? Came down, double bottom. It's going to take a while for them to recapture, but nice to see that there's a lot of big bulls sitting down there. So if we ever see it back again, the 150 range, I would not hesitate to buy this very solid company overall. That's everything I had for you guys today in terms of our stock market rundown. If you want to see my trades, I'll give you guys these every day maybe, but just so you guys know, right? We closed a few, sorry about that. So we closed a few trades. XLP, I had those wheel trades on. We closed them for a nice profit. I'll give you a full rundown tomorrow, but just so you guys can see, right? Opened a HIMS trade at the low of the day today, 27.5 puts for Friday. Still other bunch of things running. With the earnings trades went okay. Visa was a profit, Starbucks was a loss. If I would have held it literally 10, 15 more minutes after the open, it would have been highly profitable, but I don't take chances with those earnings trades. I really close them at the open. I've mentioned that tons of time before. A lot of my members close it after me for a profit. I close at a loss, but it's fine. The Visa gains largely made up for that. And more earnings trades, Hoods, Reddit, Qualcomm, and Airbnb, all safe. Take a screenshot if you want to see the levels. And Microsoft, we had some call debit spreads for a little bit of a cheeky earnings gamble. Very cheap call debit spread for June. Now that one will be at a very decent profit. I also had one on Meta for $225 that we bought earlier a few weeks ago. You might remember. That one will also probably be at a very nice profit. Both of those for June. So I will try to wind those down shortly. And that's pretty much all the updates from the positions. I'll do a full portfolio review with the account and all that tomorrow. That's everything, guys. So thanks very much for watching. As always, if you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these Monday to Friday after the close. And as always, if you have any questions, I'll answer everybody's questions tonight, I promise. Leave them down below in the comment section. Always very happy to read each and every one of your comments down there, guys. And lastly, if you are interested in joining a community of traders and investors such as yourself, you may consider joining our trading community, whereby you get access to all my trades in real time. I always give some trade recaps as well in terms of the wins, the losses, very transparent overall. So if you want access to all the trades, whether it's the earnings trades that I rarely do, but sometimes I do, in terms of the wheel trades, right, for selling puts in the market, call debit spreads, leap call option trades, long-term portfolio trades, share swing trades. You can see all the various trade sections to the left-hand side right there. You get access to all that. Also get access to our private morning live streams that I do every Monday to Friday for about 2 hours after the open, where I trade live and take all your questions on your stocks, your options, and your long-term portfolios. If you're not there, they're always recorded, so feel free to rewatch. And you get access to all our chat rooms, where I'm very fast to answer every single person whenever you guys ask me a question all throughout the day. And you also get access to our private videos, many strategies that I don't divulge on YouTube so much, like the call debit spreads, the credit spreads, leaps, everything like that. A bunch of strategies, technical analysis, a whole bunch of different strategies in there. And as well, get access to all my watch lists, all my technical analysis. You can copy paste the charts, and they also come with all of these too as well. That's it for me, guys. Take care. Pleasure as always. I'll see you tomorrow. Have a good day. Peace.